Hello and welcome. You're watching Business Plus. Breaking news coming in at this point in time at the top of this broadcast, and it's interesting because there is some development with Go First now. NCLAT, which was hearing plea from lessor side, has decided to uphold the NCLT order, which means there will be long-term repercussions for lessors. They will not be able to take possession of the aircrafts they had leased to Go First up until the moratorium ends, which could be approximately 100 days and plus. This is not good news for lessors, but some relief to Go First, as it will continue to have possession of its aircraft, will continue and perhaps drop a strategy to go back to skies and start its operations once again, resume flights once again. So some glimmer of hope there for Go First at this point in time. My colleague Karthik Malhotra joining me in the studio. Karthik, glimmer of hope for Go First, but lessors are not going to be happy.
Glimmer of hope, well, at a point, if it does get the permit and does get approval to take to the skies again. Until then, it's pretty much status quo. The good news is that, like you mentioned, the lessors can't take their aircraft back. It stays with the tribunal at the moment, and the IRP, Abhilash Lal, continues to be in chair in command. Now, lessors, of course, as you remember, had petitioned because Go First had declared voluntary insolvency to NCLT, and the blame was squarely put on the Pratt & Whitney engines, due to which 50% of Go First's fleet was grounded because of unserviceable engines and replacement stroke servicing not happening, despite the contracts being in place, not happening in time. So, I think that sort of led to Go First going ahead and putting in the plea for voluntary insolvency, and the NCLT had gone ahead and admitted that plea in its courts. And this is something that came as a rude shock to lessors. And lessors internationally are these bodies that purchase aircraft from aircraft manufacturers and lease them out to aviation companies that have the license to fly them. So the ground on which the lessors were complaining and petitioning to the appellate tribunal, NCLAT, was the fact that they believed that the contract permitted them to take hold of their aircraft and get them back into their stables as and when required. Otherwise, the fleet stuck on ground is pretty much serving no purpose, neither to the lessors, who otherwise command a rent on that fleet, and of course, since the aircraft is grounded, it can't make use of them as well. So it's definitely a body blow to lessors, and this would have long-term ramifications on their understanding of contracting in India and their overall appreciation of ease of doing business, which is highly talked about in India. So this is definitely a body blow to them, but a sigh of relief for Go First that things are going as per their strategy laid out very clearly.
Okay, so here's what we know so far. The National Company Law Appellate Tribunal has upheld NCLT order allowing crisis hit Go First insolvency resolution proceedings to move on from here. So moratorium period stays on. A two-member bench of NCLAT has asked several aircraft lessors to Go First, who are opposing the insolvency, to in fact approach the National Company Law Tribunal, NCLT, for any remedy that they want at this point in time. This comes at least a week after AWG, which is the Aviation Working Group, Karthik, also sort of gave a commentary on India, saying that this does not augur well for India and for the faith of lessors who have in fact leased out several aircrafts to aviation players across the sector. And the order is really going to jolt the fate of lessors, as you pointed out. It's not a benefit to anybody. It's not a benefit to Go First, neither it is for lessors for aircrafts to remain grounded and not take to skies.
You're right, Shweta. So again, I think it's the writing is fairly clearly, squarely on the wall. The lower court, NCLT, in this case, admitted the plea, and there was enough reason given, show cause given for that admission into the insolvency code, and it got accepted. Now, the fact that it has been accepted by the lower court, I think the higher court, the appellate tribunal, has just stuck to the verdict of the old court, and doesn't really want to create more ruckus than there already is in the Indian aviation space. But for the lessors, it is definitely a problem, and these lessors, this is their business model, right? So any aircraft that they technically own, which is not flying, on which because of the insolvency proceedings there is no rental income on those aircraft, it becomes a problem for them. It's something that is going to hurt them financially, but it's the same financial mess that Go First wanted to get itself rid of, and which is why it went into the insolvency code for the first time.
Okay, we will of course have to wait and watch out for the ramifications of that. But lessors, let me quickly name the lessors in this case are SMBC Aviation Capital Limited, Jiva Aviation, SFV Aircraft Holdings, and Engine Leasing Finance BV. Those are the lessors of Go First. A body blow for them, as we are reading at this point in time. We will of course have to wait and watch out for what they do next. Will they go to NCLT or not? That of course is the suggestion that NCLAT has made. If they want any remedy, go to NCLT, but NCLT has already ordered for insolvency proceedings to move at a pace. So Go First, there's some sort of relief for Go First at this point in time. We're going to keep tracking all developments on that story, but shifting focus now, after the Reserve Bank's announcement to withdraw 2,000 notes from circulation, RBI Governor Shaktikanta Das today urged customers to not rush to banks, reiterating they still have 4 months' time till 30th of September to exchange their 2,000 rupee notes. Das explained that even though a withdrawal of 2,000 notes has been ordered, these notes continue to be legal tender and shops must not refuse accepting these notes. Now, why was the withdrawal of notes ordered? RBI boss said that notes have completed their life cycle. They were printed 4-5 years ago and its purpose has now gotten over. Meanwhile, India's largest lender, SBI, says no ID proof of forms will be required to exchange the now withdrawn 2,000 notes, which means that you can go to SBI, you can go to SBI at this point in time, while other banks have not come out and clarified whether they will continue taking 2,000 rupee notes without an evidence, sort of a ID. But at SBI, you can go, you can give your note and you can put it in your bank, or also get an exchange, a lower denomination of notes. SBI, they're coming out with that clarification. Karthik, I want to first understand, what do these statements from Reserve Bank of India governor mean? He is of course reiterating that slow down, don't panic. You can go to the bank at your own dispense. You can go at your leisure. Don't have to go now. Time is enough. There are 4 months, and the 2,000 rupee note is going to continue to be a legal tender up until that time.
That's right, Shweta. And there are also reports that suggest that the 2,000 rupee note will continue to be legal tender even beyond the 30th of September. This is not something that the RBI governor has come on record and stated. But as we understand, from tomorrow, which is 23rd of May, that is when the exchange stroke deposit starts in the banks. Okay. So you could walk into any bank branch, but specifically what SBI has mentioned, the State Bank of India, which is the largest lender, what that has specifically mentioned is that no KYC documentation, no filling up of forms, nothing is required. You walk with a bundle of 2,000 rupee notes, limited to 10 notes at a time, so that's 20,000 rupees in value. Go over, exchange it for the next highest denomination or lower, being 500, 200, 100 as the case may be. And the Reserve Bank of India has also categorically stated that there are enough other currency notes in circulation, so there isn't going to be a crunch as far as exchange of these notes is involved. Now, of course, if you intend to not exchange but deposit currency in your bank account, then the standard paperwork will continue to be followed. What this means is you need to still fill up the form, you need to still get it stamped, and that requires your PAN card, etc. So, but that can be done only if you are an account holder in that particular bank that you have gone to, and in which case your details are in any case available with the bank as well. I think what is important to note from what the RBI Governor Shaktikanta Das said today is the fact that there have been cases over the weekend where people have gone to the market, to nearby Kirana stores or petrol pumps, or as the case may be, with wads of 2,000 rupee notes trying to purchase a particular good or service or fuel, and they've been turned back with, I think, the larger fear and panic among sellers that and misinformation to some extent, that maybe this is demonetization, maybe these notes will be hard to exchange or will not be legal tender. So I think the governor has tried to bring in calm and assuage people that it's okay, that is legal currency, and has sort of stuck his neck out and told store owners that this is legal tender and go ahead and accept this money.
Right. Karan Mehrishi is going to join us very, very shortly, but let's play up those bites from RBI Governor Shaktikanta Das when he was addressing a press conference earlier today.
You have raised a few questions about this withdrawal of 2,000 rupee notes from circulation. Let me at the outset clarify and let me sort of re-emphasize that it's a part of the currency management operations of the Reserve Bank. According to Section 27 of the RBI Act, the Reserve Bank is required to not issue notes which are excessively soiled, defaced, or damaged. Under that section, for a long time, the Reserve Bank has been following what is called a clean note policy. Therefore, from time to time, Reserve Bank withdraws currency notes of particular series and issues fresh notes. And also, as a part of the normal banking operations also through the banks, as you know that when the notes get soiled, it is returned and fresh notes are issued. A somewhat similar exercise was undertaken in 2013-14, whereby, you know, the notes which were printed prior to 2005, they were withdrawn from public circulation, and the public was advised that you can come and exchange the notes. So this time, we are therefore withdrawing it from circulation, these 2,000 rupee notes, but they continue as legal tender. We have clearly explained in our press note that these 2,000 notes were primarily issued for the purpose of quickly replenishing the value of money which was being taken out from the system when the the then prevailing 1,000 rupee notes and 500 rupee notes were what is called when their legal tender status were withdrawn. So that time the 2,000 rupee notes were introduced with a specific purpose, with a primary purpose, let me say, with a primary purpose to put back that much value into the system. And a decision was taken to adopt 2,000 rupee notes because if you do, currencies of lower denominations, in the same amount of time required for printing with the same paper, with the same capacity of printing, you could have only printed lower value of currency. So 2000 means higher value of currency was printed and supplied. So it was introduced with the primary purpose of replenishing the currency which had been declared, currency in the context of the 2016 November measure which was undertaken by the government at that time. That purpose has been fulfilled. Today there are enough notes in circulation of other denominations. Even the circulation of 2,000 rupee notes, as we have explained, has come down from its peak of 6,73,000 crores to about 3,62,000 crores. So it's come down by more than 50%, by about 50%. And the printing also has been stopped. And the notes have also completed their life cycle because all these notes were printed about 5 years ago. So in this background, as a part of our clean note policy, it has been withdrawn. So my advice is to please see it as a part of the currency management operations of the Reserve Bank. Let me put it, clearly, and that is the primary purpose which we have followed. You have also raised questions about why time is given up to 30th September. You see, unless you give a particular time, unless you specify a particular time, the process will not reach a stage of finality. And you have to give a time so that the announcement is taken with the seriousness. It is taken seriously and people come and exchange their notes. The banks have been advised. We have issued further circulars yesterday to the banks to make necessary arrangements, including arrangements to ensure that the people do not stand under the hot sun in this peak summer, to make arrangements for drinking water. But I do not expect kind of a rush in the bank branches. Through you, I would like to appeal to all the viewers. There is no reason to sort of rush to the bank. Take your time.
All right, that's RBI Governor Shaktikanta Das there. Joining us at this point in time, Karan Mehrishi, who's an economist. Karan, I want to ask a straight question here. What was the purpose of withdrawal of 2,000 rupee note? What RBI Governor is saying that this was an exercise in making because the life expectancy of any note in circulation is approximately 4 to 5 years. But data suggests that every note in circulation, which has been in circulation so far, has been for about 8 to 10 years, which it has been almost 7 years since 2000 rupee note was introduced. Is it as what it appears to be, that it was about time that we had to do away, or was there more to it? Because many are saying this was a way for government to crack down on black money, but that's unlikely to happen.
Well, first of all, thank you very much for having me. Well, as the governor was suggesting, I think the 2000 notes make up less than 11% of total currency in circulation. So I don't think the situation is as dire as the 2016 demonetization exercise is concerned. Before running parallels, I think we must also understand that the demonetization exercise demonetized over 99% of currency in circulation. So this exercise can be at best treated as a de-tendering exercise, given the fact that a heads up of 4 months is provided to note holders, as the governor was suggesting. My belief is that the reason behind the move is to de-tender large denomination notes in order to deter hoarding before the election year. That is my belief. Also, the government wants to orient the economy towards a digital payment ecosystem. And for that to happen, currency in circulation must be accounted for to the greatest extent possible. This is because the digital transaction print must evolve to include larger token transactions for full formalization of the system. Also, I think the RBI also wants to create a sense of insecurity regarding holding large currency notes to discourage hoarding. As far as impact on the general population is concerned, as per my understanding, restriction of 20,000 rupees is imposed, stating that this is applicable to per person per transaction. This is
So
for
one more
exchanging.
quick clarification, because we discussed this in the morning. When we say 20,000 per person per transaction, does it mean I can stand in the queue and come back again and come back again and come back maybe 10 times in a day? Because you're not asking for my ID anymore. And that is a clarification that's coming from RBI, that we're not going to be asking for your IDs anymore. You can just come up and you can deposit it, which essentially means I can come as many times I want.
But that clarification is still not, it's not really shedding the light as far as how many times a person can come to a bank branch, or whether he or she can go to other bank branches and deposit 20,000 rupees.
SBI has
My understanding is that this is
SBI has in
per
fact
day, per person.
SBI has in fact come on record to say that you can come in and you don't need to give any proof, any KYC. You don't need to deposit anything. You don't need to show any ID at all.
Maybe then they are trying to have some sense of inconvenience, that then a person would have to sort of stand in a queue multiple times in the day to deposit 20,000 rupees in different bank branches. But just to continue what I was saying, I think what they have done is that in the circular, if you read the circular, they mentioned that banks shall are required to comply with cash transaction reporting, CTR, and suspicious transaction reporting, STR requirements wherever applicable. So what that means is that large transactions will attract vigilance from financial institutions and reported to the RBI. So I think that holders of unaccounted money will be in the net, irrespective of the nature of the deposits, as far as CASA and term deposits are concerned. But as far as exchanging the currency is concerned, if SBI has clarified on that, I think there's an added factor of inconvenience, that a person has to stand in lines multiple times a day to exchange. But I think they are not really after those small token amounts where people have a lakh or two lying around and they want to exchange that. I think they are after people holding multiple lakhs and crores.
Okay. So, Shweta, one interesting point that came from the governor's bite that we just played out, which categorically stated this time that when they mean clean currency notes, they actually mean physically clean, not necessarily morally clean currency notes, right? And that seems to be the purpose of banks not accepting soiled currency notes and so on and so forth. But Karan, I just want to understand from you, and you being the economist here, there's a hypothesis that 3.62 lakh crores worth of currency, and even if 50% of that is not exchanged, but rather it makes it as way of deposits back into the bank, banks get liquidated by about 1.5 lakh crores or so. Conservatively, maybe 1.8 lakh crores, if you take the 50% hypothesis. So,
Right.
in any case, you've sucked out liquidity from the market and you have infused liquidity into the banking system. Does it seem to be, maybe a case targeting inflation reduction without rate tinkering, and inflation has already come under check? So, from pure economics, does it mean that in the next MPC we can expect some rate cuts? Because through this liquidity suck out from the market, you have tamed inflation even further.
Karthik, my sense is that no more than a lakh crore worth of deposits will turn sticky.
Okay.
So my calculation is based on the fact that the 2000 currency notes are roughly valued at around 3.5, 3.6 lakh crore. Yeah, I think even
Yeah.
the governor was mentioning that. So no more than 30 to 40% of incremental liquidity will be created in the system because of this exercise. So I think the rest of the currency will either be exchanged or quickly withdrawn, or in some cases used in the purchase of automobiles, white goods, and FMCG items. So we might see a spurt in demand in certain categories, such as I was mentioning, electronics and automobiles. But I'm not really sure whether withdrawal of 1 lakh crore would do any good to the inflation problem.
Okay. Interesting, because I think this morning, Karthik, we were discussing how this could be an attempt, and this was your hypothesis, to tame inflation,
Yeah,
to
but
suck
I
out
think
currency.
as Karan
But
is
it's
saying,
interesting.
it's only 1 lakh crores, it's not going to make much
Not
of a
going to
dent.
make much of a difference. And this ties in with what we discussed in terms of demand for jewelry, and now with Karan
White
pointing out
goods,
white goods,
automobiles.
automobile means that the money will continue to
So a
remain
lot of
in the
matrices
market.
to watch till 30th September, and I think we should see trend lines much ahead of that.
Absolutely. We'll see trend lines emerge ahead, but that's all I think we have for this important story. Karan, appreciate you taking time out. We're going to shift focus. A 6-member committee constituted by Supreme Court to investigate whether there was a regulatory failure in the Adani case says that the markets regulator has drawn a blank. The committee said that SEBI is, and I quote, in a chicken and egg situation in its investigation into the ownership of 13 overseas entities, including 12 foreign portfolio investors. The Securities and Exchange Board of India started its investigation into the offshore entities with holdings in Adani companies in 2020. The scrutiny intensified this year after the US short seller Hindenburg Research accused Adani of stock price manipulation and fraud. The Supreme Court has given SEBI until the middle of August, to be precise 14th of August, to complete its probe, extending a 2-month deadline it gave in March. So contrary to what many media houses and publications have reported, this is not a clean sheet to Adani. Joining me at this point in time is Amit Gupta, who is the founder of Fintrekk Capital. With me continues to be my colleague Karthik Malhotra. Karthik, we talked about this in the beginning, but it does appear from what we know and the fine prints of the committee report that we have that this is not in fact a clean sheet to Adani.
Absolutely right. And reading through the report, there are some interesting facets that emerge, which I think are going to be great discussion points going forward. Number one, like you rightly said, the panel has stated that it cannot conclude regulatory failure on part of SEBI, right? So it doesn't mean that it has even given SEBI a clean sheet. It has said that it cannot state with great authority at the moment, given the facts, that there has been regulatory failure on part of SEBI, right? But I think what is interesting in the findings is that apparently SEBI has found 13 opaque structure entities that have emerged in its preliminary investigation into Adani stocks. Now, these opaque structures are largely companies which are not transparent, and it's difficult to really come to the top of the value chain and food chain and understand who owns these companies and who are the guys who are really putting in the money. These have been made to understand are foreign portfolio investors, and these are not individual investors, right? So there are 13 such opaque structures which SEBI has tried to investigate. Apparently, there are 42 contributors in these 13 entities, contributors in way of people who fund these entities. Now, the Department of Enforcement as well as Directorate of Enforcement as well as CBDT, the Central Bureau for Direct Taxes, have tried to discover these 42 contributors and they have hit a roadblock, and hence what you stated that it's a chicken and egg situation, and a blank has been drawn on account of SEBI, which is unable to move and break through the opacity which is present in the environment right now to really arrive at who these 42 contributors to the 13 opaque companies are. Right. In addition to that, there is also the panel constituted by the Supreme Court has also gone on to mention that two terms are fairly widely defined. One is related party and the other is related party transaction. So it really is urging, and this is something that it is asking for, stating as a reason for SEBI also to seek more time in investigating both the minimum public shareholding, which is 25% shareholding of a listed company should be available for public trading, and in light of this wide definition of related party transactions and related party, SEBI has asked for more time, which it has been granted till 14th of August, to really go deeper into this MPS issue and the related party issue.
That is correct. And let me quickly, because we have the fine prints of the report here, 172 pages report. I think it's important to point out that the committee was first constituted not to look into Adani Group, but to look into regulatory failure, which means that essentially their mandate, and I'm reading from the papers that we have, was to investigate whether there has been regulatory failure in dealing with alleged contravention of laws pertaining to securities market in relation to Adani Group or other companies. So the mandate, therefore, was squarely to understand whether there has been some sort of regulatory failure.
That's right.
And let us get Amit Gupta, who's joining us at this point in time, founder of Fintrekk. Amit, from what we are understanding, the committee in its report has squarely said that the ball lies in court of SEBI now. From what we have concluded, SEBI has drawn a blank, but SEBI still has time till August 14 to come up with its own report on what happened with Adani Group, the allegations, and the allegations are squarely of minimum public shareholding, whether the norms were met there, disclosure of transactions with related parties, and stock price manipulation. Those three areas that SEBI will investigate, and the report will come up by 14th of August.
Yeah, hi Shweta and Karthik, thank you for having me. I think the broad 3 points or the key areas which the Supreme Court appointed committee were looking into, that has been covered by you briefly. I think the biggest allegation against the Adani Group has been that it has violated the minimum public shareholding norms, the MPS norms. Because there were 13 entities or 42 contributors, whichever way you want to put it out. That has been under the investigation since 2020 actually by SEBI, that it owns substantial stakes in listed Adani companies. So a violation of these norms would have proven if ultimate beneficiaries of these 13 FPIs could be in any way traced back to the promoters of Adani Group. So interestingly, SEBI actually changed the rules in 2018 that they no longer required FPIs, foreign portfolio investors, to disclose the very last natural person owning any economic interest in the FPI. What it means is that regulator cannot go behind each of these FPIs to investigate who is the ultimate beneficiary beyond the declarations which were made in the application of FPI. Now, that would save the last person from under the PMLA Act, the Prevention of Money Laundering Act, 2004. But SEBI has drawn a blank in that investigation in identifying the ultimate chain of ownerships of these 13 FPIs or 42 contributor that it was investigating, and it has found nothing. Even though it has written multiple times to various regulators overseas, especially Mauritius. But despite the change in the rules, SEBI is still investigating. And as you said, they will be giving a further report by August 14th on that. So that was the first part, the violation of the minimum public shareholding norms. The second was if there was sufficient disclosure of transactions with the related party. And again, there were some changes made by SEBI in 2021, which were applicable. Some of that was applicable from April 2022, and some has been effective from April 2023. So they were basically giving a glide path to all the FPIs to comply with these regulations of related party transactions. They've given basically time to comply with that. And SEBI has said in their report that they haven't found anything unreasonable or maybe anything out of the order, and so there is no scope of any adverse comments. Similarly, again, the stock price manipulation, they haven't found any artificial trading or wash trades to be happening between the related parties. But still, we would everybody would wait for the final go ahead by the SEBI report, which is expected to come out in August.
Amit, just wanted to understand, the report also suggests that there are 13 transactions which are under investigation right now, and on the dashboard that apparently the dashboard on Adani stocks that SEBI would be monitoring, there have been some 849 alerts that have come on the dashboard, but there is no real abusive trading pattern that has emerged as yet. So where does this sort of leave SEBI, and where does this leave the investors as a whole, where if these transactions continue to take time to be discovered, what is the recourse that SEBI could eventually take by the 14th of August?
And just to add to that, does this also mean that on price manipulation there is a clean sheet here to Adani?
So I think Shweta and Kartik, the word clean sheet would entail a lot of inferences. I would say that what SEBI has said is that given the whole network which Adani Group's companies have set up, there was no pattern of the artificial trading. That one party was buying and another party was selling. That they haven't found it. In fact, in one of the patches or one of the periods where the stock price rose very sharply, almost 80 to 100% in a very, very short period of time, in less than a month, the FPIs under investigation, the 13 FPIs were actually net sellers, which was very consistent with what other FPIs were also doing in the market. So far, what SEBI has given in the report, there has been no coherent pattern of abuse, and the committee which is also set up, that has also agreed to it, that there was no manipulation by Adani Group.
So what does it mean? What does it mean? No pattern of artificial trading or wash trades among the same parties multiple times was found. How do we construe this? What do we make of it?
So essentially, if there is any wrongdoing, then SEBI should be coming and telling that there have been related party transactions. But as far as this is concerned, this report is concerned, so far they have not been able to identify any such patterns. So we need to wait for the final report to see if they are able to find any other patterns.
Okay. Specifically on the point of, and this is important because specifically on the point of minimum public shareholding and related party transaction, and I know we've discussed this, in both cases, it appears that SEBI has drawn a blank, and the report states very clearly, and I'm reading from the report, that SEBI is seeking more time to effect more investigation, and this is now a matter between SEBI and the Honorable Supreme Court. On the committee itself, the committee itself restricted itself to its stated remit, which is to ascertain whether there has been a regulatory failure, and it would not be possible to return a finding of a regulatory failure, essentially saying that we cannot say a yes or a no, and there is status quo. Is that right reading, Kartik?
Absolutely, it seems to be the right reading, and I think, Amit, it's important at this point to also get into the stock movement we've seen on Adani stocks today, and all Adani stocks are in the green. They've all been rallying up. Some of them are hitting upper circuit as well. Is this because of the fundamental nature of the business, or do you think the report released on Friday has something to do with it?
So today's price action is more to do with the report which came out on Saturday. So yeah, I mean, it's a sentimental move. There were few shorts in the system, so there has been a strong short covering followed by long buildings in the derivatives market, especially. So I think the move is more to do with the report which came out over the weekend.
Okay. Sonam Srivastava is the founder and CEO of Wright Research, also joining us on the bulletin right now. Sonam, what sort of movement have you seen on Adani stocks today?
Yeah, so I think the movement has been quite extreme. Adani Enterprises is up 18%, which is, one of the biggest moves since the Hindenburg report came in. And all the other Adani stocks are also hitting upper circuit, right? So it's been, one of the most extreme upswing days after the Hindenburg report for Adani stocks.
Okay. Suyash also joining us with me at this point in time in the studio. Suyash, good news there for shareholders?
Definitely for Adani shareholders. Adani Group stocks, the market cap has now, reclaimed that 10 lakh crore mark. So this was one of the best days for, the Adani Group stocks since the Hindenburg report came out in January of January 24. So I think the rally today was driven by the two Adani twins in the Nifty pack, Adani Enterprises, which was, as Sonam said, up 18%, Adani Ports, which also added about 6%, and at close Sensex was up about 0.31%, and it closed above the 61,921 mark, and Nifty reclaimed the 18,300 level. So apart from Adani Ports and Adani Enterprises, IT stocks and pharma stocks were also, contributed to today's rally. DV's Lab, Apollo Hospitals, Tech Mahindra were among the top gainers in the Nifty pack today. On the other side, auto stocks were under pressure. So Eicher Motor was the top loser in the Nifty pack. Axis Bank, financials and banking stocks were also under pressure. ICICI Bank, Axis Bank were among the top losers today. But what we need to see is that today's rally was broad-based, as the mid-cap and the small-cap segment also moved in line with the market. So the small-cap index and the mid-cap index gained about 0.5%. Among sectoral indices, metals was the top gainer today. It surged about 3%. The IT index was also among the top gainers. It surged about 2%. And Bank Nifty is the one which was in an upbeat market. It fell about 0.3%. So, and Bank Nifty has been consolidating for a while now, and according to experts, it seems that the breakout on either side for Bank Nifty could trigger a fast up move or a down move. So Sonam, how is Bank Nifty positioned currently?
Looking at banks, they look the most attractive given the economy coming back up, the growth that the banking sector is seeing, and the good numbers that are coming out of this earning season, right? So banks are, I think, at the perfect place to rally, and Bank Nifty is also quite set up, to sustain the rally that we've been seeing. So we are at almost a year's top, and I think given how the market is going, there could be more legs to the rally, right?
Also coming back to the Adani Group stocks, even though Supreme Court's expert committee gave a clean chit to SEBI, Adani Group stocks have been rallying, as we were talking about, 18%. So what's driving that investor confidence in Adani Group stocks, especially enterprises, which was up 18%?
Definitely. So if if the company gets a clean chit, that's a big sentimental indicator, right? That there's not going to be a big worry for this particular group of corporate. But what I would say is that this relief that we are seeing could be short-lived, because like you guys have been discussing, there's a lot more to come on Adani. There is a deadline that SEBI has to meet by August, and then there are certain opaque structures that they have talked about. So I think this is a short-term relief rally, and the longer implications will come as we get to know more and more about the story.
Sonam, I just want to understand from you, since you are the wizard when it comes to quant investing, unlike the traditional investing that we understand, are Adani stocks popping up on your quant dashboards also?
Adani stocks might have started popping up in terms of price trends, because they have seen good trends in the last couple of months, right? That is one radar where they have come up. But if you look at the corporate governance and earning quality and those type of indicators, then those are a little bit worrisome. And especially with this news coming up, it hasn't reduced or removed the whole ambiguity, right? So I think on the price trend, obviously we can see, and especially after today, that these stocks will come up in our radar. But we have to be very, very aware of the corporate governance issues and the longer term risks. So we have to balance these two things when you pick up these stocks.
So, Sonam, in the short term, what factors should one watch out for when it comes to the market? What will be driving the markets in the next week or two?
See, I think we've been seeing a resurgence of momentum and the high performing factors over the last in this whole quarter, right? If you look from April to now, the best performing factors in the market are in fact momentum and alpha and stuff like that. But I think that given the global uncertainty, right, we cannot be sure that this rally is going to last forever, right, or for a very long time. We have to be very aware of what are the risks in the market. So I think still being very, very aware of the valuation and the earning numbers would make a lot of sense.
All right, Sonam, appreciate you taking your time out and joining us on the bulletin. JN Gupta is the former executive director of SEBI joining us right now. Sir, thanks very much for taking time out. I want to begin by asking a very pointed question. A lot lies now in the, with SEBI at this point in time, in SEBI's decision making. It has August 14 to complete its investigation into Adani Group. But the report and the expert committee report that we've discussed so far also asks a lot of question as to what SEBI could do, could not do. A lot of back and forth here. What's the way ahead for you looking like?
See, if you read committee's report, it has very clearly given its opinion on the various issues, and it has said that as of now, SEBI is only investigating one point, which is, or rather 2 points, which is the opaque structure and the ultimate beneficial shareholding. Even in that, they have very clearly said that as far as the law that stands today, there is no violation, everything has been disclosed, and last physical beneficial owner has been disclosed, so the law has been complied. But then it goes on to say that there is a suspicion, and SEBI is investigating based on suspicion. But the committee again says that investigation based on suspicion, as well as looking into the jurisdictions that are involved, it could be a journey without a destination. That is one. The secondly, they have also said that mere suspicion is not the basis of some sort of a conviction or penalty. So these 2 points are still there, but SEBI investigation there, and we have to wait what SEBI report, if it is coming on 14th of August, what does it say?
Mr. Gupta, I just want to come to page 16 of the report, point number 43, where the report suggests, in fact it has stated, that SEBI has also found some entities have taken short positions prior to the publication of the Hindenburg report and have profited from squaring off their positions after the price crashed upon publication of the report. So SEBI has apparently got some evidence on these short selling positions which have been taken before the report came out on the 24th of Jan, the Hindenburg Research report. So if that is the case, what is holding SEBI back in really identifying, minus the limitations of the opaque structure which you stated, but to even name those entities or those individuals that have taken these short positions?
I think we are mixing the two. When I said the opaque structure and something, it was regarding the shareholding of Adani companies. That is one part. What you are talking about is the trading by certain parties prior to Hindenburg report and profiting post Hindenburg report.
Okay.
And if you have read the committee's report, it has very clearly said that since the investigation is not finalized, it will be prudent not to name the entities involved or jurisdictions involved or the type of problem involved. So the committee in its wisdom has very clearly stated this. And I feel, and as an ex-SEBI person, SEBI will never release name of anybody unless until it has found solid evidence and it has passed a regulatory order. Before regulatory order, SEBI will never issue any data or any name to public. And it is prudent also because there could be situation where at the end of the investigation you may not find that something is wrong, but that person's image would still be sullied. So SEBI will never do that.
Fair enough, sir. So if we come back to the minimum public shareholding and the opaque structures which SEBI seems to have hit a wall against, now in the absence of even the Directorate of Enforcement or CBDT have being much help to SEBI's investigations, and the 2018 ruling where this opaque structure and that the fact that SEBI should have nothing to do with it was also disclosed and stated. Now, what options does SEBI have to really go and uncover these 13 entities and the 42 contributors to these 13 entities?
See, we are discussing two parts. One is the law and other is SEBI's problem of not able to find out. So these two are separate.
Okay.
SEBI is still going after and trying to find who are the real owners or what is the structure and something. And as report says, that SEBI has probably hit the wall, but they are still trying. So that is one part. But the second part is that even what happens even if they find, unless they find the information which is contradictory to what is already in public domain, where it says that the last beneficial owner has been identified. So if they come out a situation where the last beneficial owner that has been identified is different, which comes out of a opaque structure getting untangled, and then there could be a problem. Otherwise, if they do not find something, and the third and last important point is this, that committee has very clearly stated that the law have to be implemented as they exist today or as they exist on the date. So it cannot happen a situation where SEBI would say that I create a new law and I will frame charges according to new law.
But sir, if you may allow me to come in, and I'm reading from the expert committee report here. It says that besides in 2018, very provision dealing with opaque structure requiring an FPI to be able to disclose the natural person at the end of the chain of every economic interest was done away with. Yet in 2020, the investigation and enforcement has moved in the opposite direction, stating that the ultimate power or ultimate owner of every piece of economic interest in an FPI must be capable of being ascertained, which essentially means that SEBI has in fact gone in the opposite direction, has tried to ascertain who the natural person was at the end of the chain.
So that is what the report says, and I am repeating that. See, as of now, based on the existing law, there has been no violation and a last beneficial owner has been established. So today, if you go to a court of law and say something, the court of law will say, look, as of now, whatever is the holding structure, it is in compliance with the law and there is a minimum public shareholding. But then SEBI at present is investigating and it is saying that we want to establish who are the beneficial owner in the intermediate stage also. And they are doing it. That is why the committee says that the two things are moving in an opposite direction. That law and enforcement. Enforcement is happening on the basis which is not the law today.
Okay.
That is what committee
So as a former
SEBI
SEBI person, are you saying that the regulator here is moving in the opposite direction to what the law states?
Whatever I am saying here is not saying as a former SEBI person or a SEBI thing, as an individual, and I am interpreting the report. I am not giving my opinion on the subject.
Okay.
I am saying if you read the report clearly says this. What is my opinion is different.
What is your opinion, sir? Because I'm going to quote another important aspect of the report, and it says that the securities market regulator suspects wrongdoing but also finds compliance with various stipulation in attendant regulation. Therefore, record reveals a chicken and egg situation. What do you make of these lines?
That is what I am precisely saying. That look, look at the situation where, and I would say, again go back to the report. Report concludes that as of now there is no violation. Now, if and you have seen various news items that is appearing in the newspaper, social media, we're saying that the toothless committee has given a report. Now, when people criticize even a committee of this type saying it is toothless, what do you expect? So, a regulator has to satisfy all constituents. Now, in order to satisfy all its constituents, it is going beyond that. Although establishing that it is compliant with the law, it wants to say that I want to get a further investigation and satisfy myself that even within the intermediate stage, whether it is violation or not. It is beside the point whether that would be established in the court of law and penalized or not, that is beside the point. But SEBI is being extra cautious, going extra mile to satisfy the constituency that yes, there is nothing wrong and we are doing our job.
Okay. All right, Mr. Gupta, that is an important story. We have the report fine prints here with us. We will, of course, continue to break them down, come up with what lies in the fine print as opposed to what media is reporting on the surface of it. Thanks very much for taking time out. I think with that, it's a wrap on this edition of Business Plus. Thanks very much for watching.